If you watched the news last night, you saw something that should make every hair on your neck stand up. Not because of what they said, but because of what they've been hiding from you for the last decade. The financial media, the same people who mocked us, who called us crazy, who told you gold and silver were dead, they just flipped the script overnight. CNN, Fox Business, Bloomberg, all of them. They're now telling 50 million Americans to do exactly what they spent years convincing you not to do. This wasn't gradual. This was coordinated. And if you understand why they're doing this right now, you'll realize you're watching the final stage of something they've known about for months, something they've been preparing for while keeping you in the dark. Welcome back to your OG John A.G. Listen, my friend, if you've been with me on this journey, if you value the truth that the mainstream won't tell you, do me a favor, would you? Hit that subscribe button right there. I know, you've heard it before, but think of it this way. Would you walk past a neighbor who's trying to warn you about a storm coming? No, you listen. So subscribe, because what's coming is bigger than a storm. And tell me, where in this world are you watching from today? Drop your location in the comments. I want to know how far this truth is spreading. Something strange happened in the world of financial news last week. Something that most people scrolled past without noticing. But for those who were paying attention, it was like watching a magic trick in reverse. For 10 long years, the mainstream media had one consistent message about gold and silver. They called them barbarous relics. They laughed at anyone who bought them. They painted pictures of paranoid people hiding coins in their basements. Every financial expert on every major network had the same script, the same talking points, the same mockery. Gold and silver, forget about it. Put your money in stocks. Trust the system. Trust the dollar. But then, in just 72 hours, everything changed. CNN suddenly ran a story about Costco selling gold bars. Not just selling them, but selling out completely in less than 1 hour. They framed it as a cute consumer trend, like people buying the latest iPhone. But the tone was different. The energy was different. There was no mockery this time. There was something else, something harder to define. Fear disguised as curiosity. Fox Business followed with their own segment. They brought on analysts who talked about central banks, powerful institutions that control entire economies, buying gold at record levels. These same analysts who spent years telling viewers that precious metals were a waste of money, now they were showing charts, graphs, data that proved the opposite. And they weren't laughing anymore. Then Bloomberg published something even more shocking. A full-feature article with a title that would have been unthinkable just months before. The Gold Rush Returns, Why Precious Metals Are Back. These are the same people who called gold investors doomers. The same publication that recommended tech stocks over hard assets year after year. Now they were using words like safe haven, inflation hedge, store of value, words they had spent a decade trying to erase from the financial vocabulary. But the most telling moment came from CNBC. They invited a Bank of America analyst onto their show. This wasn't some fringe voice. This was one of the biggest banks in America. And this analyst looked directly into the camera and said something that sent shockwaves through the precious metals community. He projected silver, yes, silver, the metal they had dismissed as industrial scrap. He projected it would hit $65 per ounce within 18 months. To understand how insane this is, you need context. Just 3 years ago, Bank of America was telling clients that $30 was the absolute ceiling for silver. They published research reports claiming it had no monetary future. They recommended against it, warned against it, dismissed it entirely. And now, overnight, they had more than doubled their price target. This wasn't a gradual shift in opinion. This wasn't new data slowly changing minds. This was a coordinated flip, executed across multiple networks, within the same 72-hour window, almost like someone had sent out a memo. Almost like they had all received the same instructions at the same time. Switch the narrative. Now, the question that nobody in the mainstream media was asking, the question that should terrify every thinking person, was simple. Why now? What changed in 72 hours that made every major financial outlet reverse a decade of messaging? What do they know that they're not saying out loud? Because here's what veterans of the precious metals market understand. The media doesn't lead public opinion on gold and silver. They follow institutional money. They wait until the big players have positioned themselves. And then, only then, do they tell the public what's safe to believe. Which means if they're telling 50 million Americans to start thinking about gold and silver now, it means the smart money, the connected money, the institutional money, they finished buying months ago. They're already positioned, and now they need liquidity. They need buyers. They need the public to rush in and push prices higher so they can sell at the top. But there's something else happening here, something deeper than just a pump and dump scheme. Because the fear in their voices, the urgency in their coverage, that's real. They're not just trying to create a market. They're trying to prepare people for something they know is coming, something that makes gold and silver not just profitable, but necessary. February the 1st, 2025, started like any other Tuesday morning for most Americans. People were making coffee, scrolling through their phones, getting ready for work, but at exactly 6 a.m. Pacific time, something extraordinary began to unfold, something that would expose just how deep the panic really goes. Costco's website updated. A single product page went live. 1-ounce gold bars, 24-karat pure gold, available for purchase. Nothing fancy, no advertising campaign, no press release, just a quiet restock on a warehouse retailer's website. What happened next should be impossible in a healthy economy. By 6:47 a.m., 47 minutes later, every single bar was gone, sold out completely. The page didn't even have time to trend on social media. Most of America was still asleep, yet somewhere between 8,000 and 12,000 gold bars worth $20 to $30 million vanished in less than 1 hour. Think about that for a moment. This wasn't Wall Street. This wasn't wealthy investors moving money through private banks. This was regular people, Costco members, the same folks who buy bulk toilet paper and rotisserie chickens. They were awake before sunrise, refreshing a web page, racing to buy physical gold like it was a PlayStation 5 on Black Friday. Except this wasn't a toy. This was wealth insurance. This was people making a decision that their own government's currency might not be safe. And they were making that decision faster than they could rationalize why. Industry experts started doing the math. If 12,000 bars sold in 47 minutes, that's 255 bars per minute, over 4 bars every single second, one person clicking buy while another person's cart was still loading. A silent stampede happening in the digital space. No crowds, no lines, no cameras, just quiet, desperate accumulation. But here's where it gets truly disturbing. Costco has been selling gold bars since 2023. For over a year, they would restock, and inventory would last days, sometimes weeks. People would browse, think about it, maybe come back later. Normal consumer behavior. But something shifted in January 2025. The sellout times started getting shorter. First it was 48 hours, then 24 hours, and then 12 hours, and now 47 minutes. The acceleration wasn't linear, it was exponential, which means people aren't just buying gold. They're rushing, competing, panicking, even if they don't fully understand why. And that's when CNN decided to cover it. They could have ignored it. They could have buried it on page 7 of their business section. But instead, they put it on the homepage. They filmed a segment, brought in commentators, analyzed the trend. They called it savvy shopping. They smiled while describing how Americans were diversifying their portfolios. But if you watch closely, if you listen to the subtext, you could hear what they weren't saying. This is the beginning, not the end. This is early, not late. This is what happens when trust starts to crack. Because Costco isn't some boutique precious metals dealer. They're not targeting investors or collectors. They're a bulk warehouse that sells groceries and electronics. When Costco becomes the fastest moving gold distributor in America, when suburban families are setting alarms to compete for gold bars next to their grocery shopping, that's not a trend. That's a warning sign. A canary in a coal mine that just stopped singing. And the media knows it. They're covering it because they can't hide it anymore. Too many people are doing it. Too many transactions are happening. The cat is out of the bag. So instead of pretending it's not happening, they're trying to control the narrative. They're trying to frame it as normal, as smart, as just another consumer choice. But their voices betray them. There's an edge to the coverage, a tension, like watching someone smile while their hands shake. They're telling the public it's okay to buy gold now, because they know. In 6 months, in a year, maybe sooner, there won't be any left to buy. Not at these prices, not without premiums so high that regular people get priced out completely. The wealthy already know this. The institutions already positioned months ago, and now the middle class is waking up, 47 minutes at a time, one Costco restock at a time, racing toward a finish line they can't see, but can definitely feel coming. There's an old rule in financial markets that most people never learn, until it's too late. When a major bank changes its prediction, that's analysis. When a major bank reverses its prediction, that's repositioning. But when a major bank completely contradicts 8 years of its own research, that's not analysis, that's not repositioning, that's a confession. And Bank of America just confessed. For nearly a decade, this institution had been one of the loudest voices against silver, not just skeptical, actively hostile. Their research department published report after report explaining why silver was a dying investment. They called it cyclical, meaning it would rise and fall with industrial demand, but never break out. They told their wealthiest clients, the ones who manage billions, that $30 per ounce was the absolute ceiling, the top, the peak, the point where gravity would always pull it back down. In 2020, when silver briefly touched $30, Bank of America analysts went on record. This is unsustainable. Sell now, take profits while you can. Thousands of investors listened. They trusted the expertise. They sold their positions, and silver dropped back to $22. The bank was right, or so it seemed. In 2022, when inflation started really biting into people's savings, silver climbed again. It approached $28. Momentum was building. Retail investors were getting excited. And once again, Bank of America published a research note. No monetary future, purely industrial metal. Don't chase this rally. Again, people listened. Again, they sold. Again, silver fell back. The pattern was clear. The message was consistent. The advice never wavered. Until February 4th, 2025, that's when everything changed. Bank of America released a new research note, distributed to all their major clients. The projection was so shocking that it made headlines across financial media. Silver, the metal they had dismissed for 8 consecutive years, was now projected to hit $65 per ounce by the third quarter of 2026. Not $30, not $40, $65, more than double their previous absolute ceiling. The analysts didn't apologize for being wrong. They didn't explain what data had changed. They simply published the new number, as if the old predictions had never existed, as if they hadn't cost their clients millions in missed gains. But here's what makes this truly sinister. Bank of America doesn't just publish research. They trade based on that research. They have their own positions, their own accumulation strategies, and there's a well-documented pattern in how major banks operate. First, they tell clients to sell while they quietly buy. Then, once they've accumulated enough, once their position is secure, they tell clients to buy, driving up the price. Then they sell their holdings at the peak, leaving retail investors holding the bag. It's not conspiracy theory. It's documented market behavior. The SEC has fined banks billions for exactly this practice. So when Bank of America suddenly flips their silver projection, after 8 years of bearish predictions, after telling clients to avoid it at 20, at 25, at 30, now suddenly projecting 65, the question isn't whether their analysis is correct. The question is, when did they finish buying? Because you don't publish a price target that high unless you already own the asset. You don't recommend something to 50 million potential buyers unless you're ready to sell to them. This is basic market mechanics. Create demand after you've secured supply. And right now, Bank of America is creating demand, which means their supply phase, the quiet accumulation, the strategic buying, that already happened months ago, maybe longer, while they were still telling the public to stay away. But there's something else buried in their research note, something most people missed because they were too focused on the $65 headline. The bank listed their reasoning, their justification for the dramatic reversal, and buried in paragraph 7 in technical language most readers would skip. They mentioned something called monetary uncertainty events. Not inflation, not industrial demand, not supply chain issues. Monetary uncertainty, that's code. That's banking language for we think there might be a currency crisis. They're not saying the dollar will collapse. They can't say that publicly. But they're saying something is unstable, something is uncertain, something that makes silver, physical silver, more valuable than paper promises. And they're saying it now, after years of silence, because whatever they're seeing, whatever data they have access to that the public doesn't, it's serious enough to risk their credibility, serious enough to completely reverse 8 years of predictions, serious enough to tell their wealthiest clients, get into silver now, before the window closes, before $65 looks cheap, before the real panic begins. There's a moment in every financial collapse when the narrative breaks, when the machinery that controls public perception suddenly stops working, when the carefully constructed illusion can no longer hold, and the institutions that spent years lying start telling the truth, not because they found their conscience, but because hiding it anymore would be worse than admitting it. We just crossed that line. What happened in those 72 hours wasn't journalism, it wasn't market analysis, it wasn't financial education, it was preparation. The media complex just activated what insiders call the endgame protocol, the final phase before everything the public believes about money gets shattered. Let's connect the dots with brutal clarity. Costco sells out of gold in 47 minutes, creating visible proof that regular Americans are panicking. Bank of America reverses 8 years of silver predictions, signaling institutional capitulation. CNN, Fox, Bloomberg, and CNBC all coordinate coverage within the same 72-hour window. Now, this isn't coincidence. This is orchestration. Someone, somewhere high up in the financial system, gave the green light. The signal went out. It's time. Start preparing the public. Because here's what most people don't understand about media and money. The mainstream financial networks aren't there to inform you early. They're there to inform you last, after the smart money has positioned, after the institutional money has accumulated, after the politicians have moved their assets, after everyone with inside information has already protected themselves. Then, and only then, do they tell the general public what's coming. They call it managing the transition. They call it preventing panic. But what it really means is giving the powerful a head start while the rest of us scramble to catch up. And right now, in February 2025, they're scrambling faster than ever. Because whatever they know, whatever timeline they're working with, it's shorter than they expected. The collapse, the reset, the monetary uncertainty event that Bank of America mentioned. It's not coming in 5 years or 3 years. It's coming soon enough that they need average Americans to start moving now. Not because they care about protecting your wealth, but because they need liquidity, they need volume, they need the market to stay functional. If everyone rushes in at once when the crisis actually hits, the system seizes up completely. But if they can slowly, carefully, get millions of people buying gold and silver now, spreading out the demand over months instead of days, they can manage the controlled demolition. They can protect the infrastructure even as the currency burns. Think about what that means. They're literally admitting, through their actions, if not their words, that physical precious metals are the safe haven, that paper assets, stocks, bonds, even cash, might not survive what's coming, that the conspiracy theorists they mocked for 10 years were right. And they're doing it on national television, with calm voices and professional graphics, like it's perfectly normal, like this is just another investment opportunity. But watch their eyes, listen to the pauses between their words. Notice how they never quite explain why this is happening now. They give surface reasons, inflation concerns, geopolitical tensions, central bank buying, all true, but incomplete. The real reason, the thing they can't say out loud, is that the people who run the system, the ones with access to real data, they've seen something, a debt spiral that can't be stopped, a currency crisis that's mathematically inevitable, a timeline that's shorter than the public knows, and so they're doing what they always do. They're protecting themselves first, then their major clients, then their institutional partners, and finally, at the very last minute, they're telling you, not because they want you to win, but because they need you to participate, to provide the liquidity, the volume, the market activity that keeps the system running just a little bit longer, long enough for them to finish positioning, long enough for them to move to safety before the door closes. So when you see CNN talking about Costco gold bars, when you see Bank of America projecting silver at $65, when you see Bloomberg publishing articles about precious metals being back, don't celebrate that the mainstream finally agrees with you. Understand that you're watching the final act, the moment when they stop pretending, the moment when the script flips, the moment when admission becomes strategy. And if you're just now waking up to this, if you're just now wondering whether you should own some gold or silver, you're not early. You're exactly on time. Right where they want you, ready to provide the demand they need, at the moment they need it, before the real panic begins, before premiums skyrocket, before availability disappears, before $65 silver looks like a bargain, before the endgame protocol completes. The choice has always been yours. But the window, the time to make that choice without fighting crowds, that window just got a lot smaller. And they just told you so. On national television, with 50 million people watching, the question is, were you listening?